Gold continues to trade around the key level of 1,200. And Tom, it feels like it's almost Groundhog Day, except for this week, we're below just around the 1170s. If we take a look at the 5-day chart, you can clearly see that nothing's really changed. It's the beginning of 2015. What's the story this week?
Well, so we have basically a little decompression in Greece. So that affected the dollar. Dollar's very strong, euro weak, and also you have the higher rates. But really, relatively speaking, I mean, yesterday was really the big day. Today we're down, but in terms of dollar euro really took a whack here, and you would actually expect gold to be a little bit lower. But we have some technicals here, 64, 78, and it looks weak. But I don't think there are enough longs in here to really give it that collapse. It's just kind of a step ladder down. And I guess until we break 1140, you're not going to see any real panic selling here.
It's interesting because it feels like a lot of the movement has been on Tuesdays and Wednesdays, and tomorrow there's that key Eurozone meeting where they're going to decide whether or not they're going to give Greece another bailout. So it feels as if, from a fundamental perspective, there really is not much to be bullish on. You have the higher dollar, Greece is still up in the air, then you have interest rate hike speculation. So it's really just a technical trade at this point because there are no longs in the market, or not enough shorts.
Yeah, you have the ETF, right? So a lot of those people bailed out a couple of years ago, and you have people now below the 1140 level that could, then they will be underwater, and then you may see some selling there. But until we get through that level, I don't think you'll see the kind of panic selling that we saw a couple of years ago, because there are longs, but just not as many, basically, and not as many weak longs, so to speak.
So what are traders looking for just to get the first interest rate hike out of the way, finally get some resolution with Greece, because it's almost 5 years now that we're looking at the same situation?
Yes, I mean, here we go with another big can kick, so now they've basically delayed it till the end of the summer. It doesn't mean it's resolved yet either, but I think that they're a little more confident that they're really trying to get something done. And again, with the interest rate hike, look, if we get a couple of interest rate hikes, then you have a little bit of volatility maybe entering the market, because every meeting will be, there's three choices, lower, raise, or hike. Lower, raise, or leave the same. Right now, it's just a matter of getting this out of the way, and you want to get to see how much of this is already priced in. And that's really the question, is how much of this is priced in? Will we get a spike lower and then maybe a bounce? Because a lot of it was priced in and people are just trying to push it around. But again, right now gold, there's not a lot of interest, there's not a lot of fear in the market, and people are just used to these kinds of things now. It's not as dramatic as it used to be.
Finally, where do you get constructive? Where does it have to break down below to get a short on, and where do you have to see it break above to get really convicted long here?
Oh boy, well, short term, I guess 1164, you break that level, and then of course 1140. And on the upside, I guess you'd have to say 1220. Get above that level and maybe close above there a couple of days. Then it starts to get a little bit interesting. But until then, you're just really range bound, and summer is in place.
All right, thanks very much, Tom.
You're welcome.
For The Street in New York, I'm Jill Malandrino.